Hey everyone, how's it going? This is Grisha from Technical Option Traders Inc. Hope you guys are having a great day. Hope you guys had a good long weekend. So today FMOC minutes come out with a hawkish Fed. The Fed did state that they are going to continue the trajectory that they're headed in. That is increasing rates for now. If we look at the S&P 500 right now, it's very sideways right now. Not a lot of big price movements happening in the S&P 500. It's very slow moving, and that is consistent with summer months, right? We also do have midterm elections coming up this year, so we have to be mindful. But however, next week we have a big data that is coming up, and that could really impact the S&P 500. So right now, what I'm looking at on the hourly time frame, on the 2-hour time frame, is this level right here between 395 and 392. Right, this is a huge level right here. This level needs to be defeated in order for buyers to have a chance and have a shot at the 404 and the 408 level. If this level is not defeated, we are going to possibly come back down, break the 372, and come to 357 here, right? And the information that can move the market lower is CPI data. Is also data that is related to GDP, which will confirm that contraction has happened for the second quarter in the U.S., and that will lead to a recession, a confirmed recession, right? Which can push the market a lot lower, right? So even though the market is forward looking, a recessionary scenario is not something that we want with a Fed that is also tightening at the same time. It could set up for a very troublesome market, right? And we can see that reflecting right now. So looking at the S&P 500, if we cannot get above this level with volume, which is the 395 level, we can expect a massive sell-off to come in the coming weeks, right? So that could be on July 24th timeframe. So if we see right here, as the movement was going up, the price action has been declining and very steady, right? So, however, overall in this action, there is a lot of buying. So far, dip buying has been the play and is still continuing to be the play. So we'll have to keep an eye if this continues to go to the upside, right? So if this market continues to move higher. So this 395 is what's going to take us there. Also, the triple Qs look beat down. Okay, triple Qs are very they're over 30% sold right now. The whole sector, and what we want to see is we want to see the triple Qs get above this level right here, which is a 294 level. And if it can't get above that, it's going to continue to move lower. This massive gap downs and gap ups, and now we're starting to see some sort of a movement that is a little bit more consistent with price action that is rising with volume. So we want to pay attention to certain levels such as the 294. If we can get a close above it and get some consolidation and push above 305, we have a real chance. So for triple Qs, the 305 is a more critical level, and that is something we want to keep an eye on to see if price can get above this zone. If it cannot get above this zone, it's going to move lower, right? So right here we have a confirmed a higher low, okay, or a lower high. So right here, so the trend is predominantly here is down. Okay, it's still down. However, it is very aggressive to the downside, but we want to pay attention to this, and we want to pay attention to this level. Yes, we can get a temporary relief rally to the upside. That's perfectly fine. However, with the economic data that is coming out, it can really take down tech with it. Okay, so that is something that we want to continue to watch. Looking at the Dow here, the Dow is just choppiness right now. Consolidation, not a lot going on, which makes sense going into the FMOC towards the end of the month, and also next week's big economic events that are coming out. So right now with Dow, this is my level of interest, which is the 332 and the 326 levels. If these levels are not defeated, we can expect the Dow to come down a lot lower. Okay, so we have to look at this. Okay, so the Dow temporarily can rise up to here. Okay, but what it does here is more important. So we have to keep an eye on this level and see what happens, and this will be the critical level of an up move or a further down move that's going to come up. IWM looks very interesting here. It looks ready that it's going to break down. So once again, IWM looks like it's printing another bear flag. Okay, so because it looks like it's printing a bear flag, we have to be very careful here. Okay, so if it rejects this upper channel right here, we can see a move to the downside all the way up until here. But if we wanted to go extend the bear flag this way to give ourselves more room, this is something that we want to keep an eye on. Okay, right now IWM has critical levels. Okay, and the critical level number 1 is right here, which is a 178 level, and the second level is right here, which is a 165, 166 level. Okay, so if it's going to get above this, we need to pay attention to the volume. Currently, the volume has been steadily declining in this area, so participation is decreasing. Okay, I don't want to see that. If the trend is going to change, we would like to see more than normal participation or excess of participation by the buyers. Right now, we're not seeing that. The trend is consolidating in a way in two ranges. What we want to see is we want to wait for the next couple of weeks to get a more clear picture of what's happening. But right now, the predominant trend continues to be downwards. And if it breaks 165, we're going to go down to 144. If it is able to cross above 180, we're going to go to 188, 191. Okay, so that's something that we want to keep an eye on. VXX is working its way back down again to retest 21. If it can go below 20, I will have more confidence in the market right now. But so far, the way the market is headed right now, as long as VXX stays above 22, it could be problematic for us. Okay, so what we want to keep an eye on that, and we want to continue to focus on these levels here. Gold is our next target here. Gold has been hit, guys. Gold is below my target at 164. It's at 162. So this is a good short position here, and the target for gold would be around 147 here. Okay, 156 could be target one. 147 is the next target. Gold is absolutely smoked here, and I don't like it for a long position or even adding here. I want to hold off on it. It does look very bearish, especially if you guys can see the way it's breaking down here. We can definitely get a pullback to about 166, and after that, if it doesn't hold here, we don't go bullish above that, it's going to break down even further. And the target right now is 157, then 148. Okay, so we'll see. We'll keep an eye on gold. Gold short, being gold coming down, so with VIX coming down, is a positive sign that the market could run up. Okay, so that is something that I am continuing to watch for. But also at the same time today, if you guys look at these sectors right here, we had utilities, which is defensive, up, but tech is going up again. Conductors, semiconductors, healthcare, industrial, and consumer staples are on the rise, with retail, energy, oil. So I'm not too worried about the retail sector. I know the retail sector is going to get hit because supply and demand, but energy and oil and gas we want to see down, with commodities down, while tech and everything else is going up. So this is a healthy move today, and we'll have to keep an eye on this to see to monitor this trend and to continue to see what happens in the next coming days. But right now, the market has very big economic events that are coming out in the following weeks. If you're a trader, I would recommend letting those events pass, or trading. If you're day trading, take profits quickly. Okay, if you're not taking profits quickly, you're exposing yourself to whipsaws on where premiums and moves can be very volatile the other way. And with the spreads being the way they are, you may not be able to liquidate your position. All right, guys, so this was my analysis for today. I'll see you guys tomorrow.